Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading. I have with me today my co-host, Chris Agelastos, and you are tuned in to our podcast entitled The Secret War on Cash, where we take a look at just some of the emerging developments in our financial markets, our global marketplace, global economy, and discuss maybe different ways that is or perhaps will be having a impact on each one of us. So, Chris, good morning. Thanks for being here today.
Yeah, good to see you.
So we're going to jump right into, I should say, one of our favorite topics, or at least one of a recurring topic, we'll call it, and that is BRICS. BRICS, our little financial locomotive, we'll call it, because it just keeps gaining momentum more and more every day. And it seems, I'm telling you what, I can't really think of another topic pertaining to the financial markets and the economy that literally every day there are multiple reports that are coming out that are talking about just some of the advancements, some of the changes, some of the things that BRICS is doing, the reasons they're doing them. And let's get right into the first article here. The expert says that the US dollar is nearing the end of the line. Well, that doesn't sound good. And that isn't good. BRICS is going to be having their summit here in just a couple of weeks, actually. Mm-hmm. And, when you talk about the dollar and the end of the line, and especially when you're speaking in the context of BRICS, it's not complicated as to understand why this is happening in so much as that the term BRICS, Chris, as we've talked about, has become synonymous with that term de-dollarization. So right. The end of the dollar, as BRICS is growing, if BRICS is accomplishing what they are setting out to do, yeah, that would mean the end of the dollar, because what they're setting out to do is to de-dollarize the world. So, with the US dollar nearing the end of the line, number one, why don't you share with us why that is going to be? Mm-hmm. And if you don't mind, number two, if you have any perspective or idea when that will be.
Yeah, well, why it's happening is pretty straightforward. BRICS has wanted to replace the U.S. dollar as a reserve currency. They've wanted to kind of distance themselves from U.S. sanctions, and so they've been open about wanting to do this. Like you said, it's really no secret they're kind of following their plan, and here at this upcoming BRICS summit, they're expected to announce their BRICS pay system, which is going to make it easier for these BRICS participating nations to trade in their own local currencies and again, distance themselves from the dollar. So that's what, when you say analyst here, mentioning nearing the end of the line for the dollar, that's Robert Kiyosaki, who I'm sure a lot of our viewers and listeners would, at the very least, recognize the name. He's made quite a name for himself and built quite a fortune, with real estate specifically.
That's Rich Dad, Poor Dad.
Robert. That's right, Rich Dad, Poor Dad. He has a big podcast. He's been on TV selling books for, at least 25, 30 years that I've seen it too. And so he is somebody, some people love him, some people hate him, because he is outspoken, but over the course of time, he's proven to be pretty accurate. And, the reason he's saying it's coming near the end of the line for the dollar here is because BRICS has picked up so much momentum. He's expecting more bank problems, bank closures coming here in the next year. And, already feels like our economy is sort of in the middle of a crash. I know some people are feeling it already, obviously with inflation, poorer job numbers, rents going up so much in the private sector. And, he points out that all the government has really been doing is printing more money and trying to pump more money into the system. And that hasn't been working. And so, that's sort of their final tool to be able to, stave off some of these problems. And it hasn't been working. And so, he feels at this point, the end of the dollar, at least the dollar dominance is right around the corner, and there's not really much we can do to avoid it at this point.
Yeah, well, and dollar dominance, I mean, shoot, what was it, a year ago when, in violation of basically the OPEC agreement, I think it was India who started buying, purchasing their oil with their currency rather
Hmm.
than the US dollar.
Hmm.
And, and I think that's what's really important to understand with this is that, it's not singular things that are happening that are causing the weakness in the dollar, meaning like it's not just because BRICS is doing what they're doing and getting people to jump on board with their de-dollarization effort. As that's going on, and it is going on, like, again, it's growing like a wildfire. But you also have the problems with, our national debt, which grows. The interest payment alone on that, as we've talked about, is $3 billion a day. It grew by
Yeah.
5% in 1 month, just a month or so ago.
Hmm.
It's out of control. And, our Fed has been fumbling around trying to figure out ways to jumpstart, manipulate, trigger the economy. And it just, the progression of this deterioration, just continues and continues and continues. And that goes like into this next article here. The US dollar reserves fall below 60%. And this is the first time that's happened since 1995. Okay.
Yeah.
That's a concern. I mean, certainly
Hmm.
that news in and of itself is certainly not in and of itself, probably not something that's going to completely cripple our economy. But I think what speaks to the bigger picture here as you get into this article, they right away start talking about, yes, you have these dollar reserves that are at these low levels now, but for the last 2 years, the BRICS alliance and central banks have been stockpiling precious metals, gold.
Hmm.
In the last 18 months, they collectively have purchased 800 tons of gold, China being 225 of that in the last 15 months.
Yep.
So like it's there's substance and strength behind what this BRICS alliance is doing, and you have central banks doing the really, Chris, and we've been covering this topic as well. The central banks buying gold, BRICS buying gold for quite a while now.
Hmm.
When it comes to buying gold, really the only country that we don't, major country powerhouse we don't hear about that's buying gold right now is the United States.
Right.
And that's frightening. That's of concern because let me tell you this, and this is for all those tuning in as well. When there's uncertainty on the horizon, there's a reason central banks and BRICS are buying gold, because that's traditionally or historically been the safe haven. That's been the place you want to be when there is that
Right.
uncertainty out there. And
Yep.
when we're looking down the barrel of what we are here in the United States as a nation with our financial markets, our system, our debt, and we're not doing that, I'm concerned about that, Chris. How about
Yeah.
you? What are your
Yeah, absolutely. And I'll tell you, the US, right, our system since the 70s has said that, well, we don't need gold. We have the dollar. The dollar is strong. The dollar is the world's reserve currency. The dollar is used by everyone. And so gold, I suppose in that instance, rightfully so, hasn't been a focus of ours. But now, as we begin to lose all of those advantages that we had with the dominance of the dollar, and that's really what this article is pointing out here. It's showing we've been talking about this for a while here about BRICS and what Russia and China and India especially have been doing, and this just shows you in the numbers that for the first time in 30 years our reserves are below 60%. We're at, I think, 58 and just barely over 58% right now. And so this is just, the proof is in the pudding, as they say, that what they have set out to do is happening. This is the path they're on. They're doing exactly what they promised. It's no surprise. But you bring up a good point. If the dollar, I hope that our leaders haven't been arrogant enough to think that they don't need anything other than the dollar. I hope that we find out that our gold reserves are in fact there, or even better, that they're larger than we hope. Because if they're not, and we really are obviously losing our power and our influence, financially speaking, across the world. If we don't have that gold to back things up, we're really going to be in a lot of trouble.
Yeah, I totally agree. And I don't believe we do. And I don't believe that's an interest of theirs. In fact, the only thing that seemingly that the United States, in terms of alternate currencies or alternative currencies, that they're weighing in on is CBDCs, digital currencies. And, certainly that's been a hot topic and it's been discussed across the globe. But, arguably, like to say that this is the solution, I mean, I was I was in a meeting yesterday. We were talking about this topic, and the bottom line is we in effect kind of do use a digital currency currently. I mean, we have a fiat money; it's a piece of paper, but we don't even use paper anymore. Everything is an electronic version of money. So to say that we're going to switch over to electronic version of money, I don't know if that's completely accurate. This is just a different version of electronic money that they're wanting to launch. And with that being said, in effect, it's like, okay, well, we've screwed up this electronic currency. Trust us, we're going to give you a new one, and we promise not to screw this one up as bad.
We've learned our lesson.
Right. That's the takeaway I have from it. And so, it is of concern. And what this looks like to consumers out there, if those of you tuning in want to learn a little bit more about this secret war on your cash, contact our office and get a free report, take a read. If it makes sense to you and you agree that these are some problems out there and you don't want to be blindsided by, there are some excellent next steps or things that you can do in that report, and we have other materials we can get you as well. You can receive those by contacting us via telephone at 1-800-289-2646, or you also can visit us online at www.swissamerica.com. Thank you for tuning into this podcast, and if you're not subscribed, we hope you do so, as we'd love to see you more in the future and bring you some more news and information like this as well. So, Chris, thank you so much, and for those of you tuning in, have a great rest of your day.
Thanks a lot. Take care.